Welcome to this channel, and today we're going to talk about the basics of commodities. My name is Stefan, and in this channel we talk about investing and we give you a lot of information on how to be a better investor. So what is a commodity? And this is a question that I have wanted to answer to myself or get the answer for myself quite a long time now. And you can see here I wrote down, it is a physical good that can be bought, sold, or traded for a product of a similar value. A natural resource we can use to make another product. So you look at your fridge, you look at how electricity gets to your house, you look at bicycles, you look at anything that you can take out of the ground to make a physical good, or a tree, or a livestock, anything in that matter that you can use to make another product. And they can be grouped in different categories, and what I would like to look at here is 3 types of commodities. So I broke them down in 3 types of groups, so it's easier to understand. So you get the metals, that is also known as hard commodity. You get agriculture, that's known as soft commodity, and then you get the energy sector that provides energy for us on a daily basis. So when you get to the metals, you get base metals and you get precious metals. Base metals are steel, copper, things that you use to get electricity, lead to make batteries, nickel, zinc, aluminium or aluminum, wherever you are in the world, to make window frames. These are your base metals. And then you get your precious metals, things like gold, silver, platinum, palladium. You make rings with it. You use it for silver. Silver can be used in solar panels, can be used in electric vehicles, also in your chips, your microchips. So they are very usable, but they are known as precious metals. Then in agriculture, there are a lot more than these, but this is just an example to give you. Agriculture is corn, rice, coffee, tobacco, sugar. You get orange juice. You even get livestock like hogs, cows, tea, also in here. But there are many other agricultural, but they are known as soft, so easy to understand. And then energy, your gas, your crude oil, your coal, water, maybe some wind energy, some solar, so very easy to understand. But then when you look at them from an investing perspective, how can you use them to, if you're an investor, how can you look at them and how can you see what are the risks compared to other types of investments? So we're going to look at some features of commodities. Now, the only reason I broke it down like this is for you to easier understand, because I never understood this, and there are a lot of information out there, many people trying to explain it, but I never understood it well, so I tried to break it down for you like this. So the features of commodities, these things either need to come from a mine, come from a farm, and they need to get transported to a manufacturer, to the end user, to the consumer, and they need to be stored. And you can take like metals. Some of them you can store for a long time, and you can take out and they look the same. But grain, corn, they're not. So they are perishable and they are fragile. So always have to keep in mind that commodities are something that you need to study, you need to follow, you need to understand before you invest in them. But to know that they can perish. I mean, another feature is delivery. Ships sink, trucks blow up. You need a type of insurance. So pipelines for oil to get transported. These are all factors that you need to keep in mind when investing in commodities. How are they going to get transported from one place to another place? A big factor in commodities is politics. To give you an example, that will affect the price. Like Ivory Coast deals about 30 to 40% of the world's coffee. and if there's any political instability or anything happening in that area of the world, it can affect the prices of the underlying commodity, like in this case coffee. So you definitely want to read the news, make sure that you like macroeconomics before you move into investing into commodities. But yeah, there's something to keep in mind. And then the last point here is commodities does not produce an income. I mean, you can buy a share of a company, you can buy a government bond, and it can yield an income for you, or a share or company can pay a dividend. Where investing in a precious metal, in any commodity, you can only use it at the end of the day. So it cannot produce income for you. So these are factors that you can keep in mind before you invest in commodities. Now, it sounds maybe scary. It sounds like something that too many factors to look at. But you want to trade it, you want to invest in it. Where can you go, and how can you start investing in commodities? Now, I broke it down into two categories. The first category is I would like to call the professionals, like wholesale, and then you get the retail. Now, I classify myself as a retail investor, but under the professional or the wholesale is, let's say Starbucks. Starbucks is a wholesaler. They want to buy coffee, so they will basically go onto the markets where something like the New York Mercantile Exchange or the London's Metal Exchange, the Chicago Boards of Trade, or maybe the Chicago Mercantile Exchange. And these are old school trading markets, almost like where you can go and you can still see people standing in the pits screaming at each other and bidding up the price. There are not a lot of them anymore, but the London Metal Exchange still have that. And you can also buy futures contracts, and I'll go a little bit into futures contracts right now, but basic form, just to give you an understanding. But this is the wholesale. Another one that the retail investor can look at is you can buy the physical commodity, like a gold coin or a sack of coffee. You can buy barrels of oil, and normally the futures contract gets traded in contracts. So when you buy future contracts, you would buy a basket of them. Like you'll have to buy 100 barrels of oil. So the physical, sometimes you have to take delivery of a lot of them at the same time. So, but it's a great way. You can store some gold coins at home. You can buy some silver as well. Another way for retail to invest is in a fund. Now you get different funds, but be very aware of the different fund that you will invest in. You get an ETF, exchange traded fund. Basically, the fund manager will buy the underlying commodity itself, and they will store it in a vault, as you can see here, where they will then sell the shares on the open market, and you can buy it, and they hold the physical good. This is the safest way to invest in an ETF, and this is one of the best. It's a low priced, low entry level, and you can buy it on the stock market itself, like on your brokerage account. Another way that you can invest in commodities, and this is not in the commodity itself, but this is in a company that produces the commodity, like a mine, like a farm that trades on the stock exchange. You can buy the shares of the company on the stock exchange, and this is what I like to do, because they are attached to leverage. If the underlying commodity price goes up, so will the share goes up, and actually they will make more money, so their balance sheet will get stronger, and they will have more free cash flow as the commodity price goes up. However, they are volatile. It is super risky. So as the price comes down of the commodity, so will the price of the underlying company that produces that commodity come down as well. So be very aware of that. I quickly want to explain to you a futures contract and how it works. We're not going to go into detail in this, but to give you an example, A futures contract are an agreement between a buyer and a seller to buy or sell the underlying asset at a specific price and a date in the future. So this is important, specific price and a date in the future. So if I give you an example, a very quick example is futures contracts need to be bought in there are contracts because you buy an amount of them. As I mentioned earlier, you will buy 37,500 pounds of coffee, and you will buy a contract to handle that amount of coffee. Now you use a lot of margin to trade futures contracts, so that's why it's only 375 to handle this much coffee. So if this coffee shop owner buys one contract of beans at this price, he can sell a cup of coffee for $1. However, he buys one contract every 2 months. So you say every 2 months I buy this amount of coffee and this is how much the coffee will cost. However, if there's any political instability and maybe the coffee price goes up to $450 a contract, he might then sell a cup of coffee for $1.50, and he doesn't want that. I mean, airlines don't want the gas prices to go up, because then they have to charge more for air tickets. So what they want to do is they will then buy the contract, saying that okay, every 2 months I will buy an additional contract for this much. If the price goes up from now until the next 2 months, I can still buy it for this much, for 375, and then I know I can still sell my cup of coffee. The only reason that they don't buy everything right now is because the price might go down, right? So then they can buy it in the future for less, and their cup of coffee can stay the same, and they can make a bigger profit. But the risk is too high, so that's why they say they will rather buy the contract right now instead of later. Now, I'm not going to go into too much detail with this, but this is the reason why they will buy future contracts. If you find some value in this video so far, go ahead and like the video, and go check out some of my other videos that I've done on mining investing and some of the people that I follow when it comes to mining investing, or just commodities itself. But make sure that when you invest in commodities or in mining investing even, make sure that you study it well, that you like it, that you like to learn about macro environment, that you like to learn about commodities itself before you invest in it. So I just wanted to mention that. If you have a comment, please leave it down below. Let me know what you think about this video, and let me know if you've invested in commodities before. What is your experience? And yeah, I would really like to know. My name is Stefan, and in this video we talk about investing. See you in the next video. Bye bye.